everyone could take your seats, that would be awesome. We're going to get started in just a second here. Got very quiet. We have beer and sparkling water back there, so feel free to grab one before you sit down. Before I bring Michael Goldstein up here, our awesome speaker, I'm just going to make a couple announcements. So, first of all, thank you so much to Unchained Capital for sponsoring our event. Before I continue, I'm going to introduce Velvet here, who's with Unchained. Has everyone heard of Unchained Capital before?
Yes.
Yeah? Good. Our sponsor is Meetup.
Alright, well quickly, just for those who have not heard about us, we are doing crypto collateralized lending. Right now we provide US dollars to what we say Bitcoin and Ethereum holders. So it's a great option to get liquidity. It still holds your assets. One of the best use cases we've seen and many customers are doing is investing in real estate. So I keep telling everyone, it's a great option to leverage. You get two assets working for you. And then, in theory, your crypto is going to go up, and your assets and your real estate is going to go up. So, a few of us are in the room. We have Unchained shirts on. So, if you have any questions, come talk to us. And then I have huddle stickers for anyone who wants a huddle sticker. Super cute.
Can all the Unchained people just raise their hands really quickly so everyone knows where you are? Cool. Awesome. Thank you so much. All right. So one more housekeeping. Austin Startup Week is happening October 1st to the 4th. And I wanted to just let y'all know about two things. One, so has everyone heard about Austin Startup Week? Yes? No? Steven's shaking his head no. Okay. Well, it's basically like a mini South by, but just all about Austin startups and technology. There's an event called the Austin Startup Crawl that happens, and it's last year I think we had 6,000 people come through for the crawl. It's super awesome. It's like a giant bar crawl, except basically just startups as stops. We have a huge the whole lobby in the Omni is just filled with startups that are talking about what they're doing, and it's a really great way to one, brand exposure, and two, hiring for talent. So you have to apply to be a host for that by August 13th. And then one more thing, if you're interested in getting a talk or presentation on anything blockchain or crypto related during Austin Startup Week, you should submit your ideas by Friday, August 3rd. I assume a lot of you already heard about that, but I just want to make sure. And so email brants@capitalfactory.com if you're interested in either of those things. And now I'm very excited to introduce Michael Goldstein. He's a Central Texas native and a CS grad from UT Austin. He's the founder and president of the Satoshi Nakamoto Institute, which curates cypherpunk history and literature, as well as economic analysis on Bitcoin. He co-hosts the Noted podcast, which I'm sure many of you have listened to before, which covers Bitcoin current events, technical news, and commentary. Thanks so much for being here.
Howdy, thank you so much for having me, and thank you Unchained Capital for hosting this great event. So I hope I'm not speaking too much to the choir with this talk on sound money, but I consider it the fundamental issue in Bitcoin, and therefore a perennial and evergreen talk to give. So my talk is Bitcoin, sound money for the digital age. Is there a reason you can't see the top of the slide on this?
Is it
It might be a Zoom thing.
Yeah.
Got it. There we go.
Okay, cool.
All right. So I want to start at the very beginning, which is like, what is money and why do we have it? What is its purpose? Basically, at the beginning, if you are trying to acquire goods in the world so you can make use of them, you need to find someone to trade it with, trade for it with, unless you can make it yourself. But unfortunately, when you're trading with people, there's something called the double coincidence of wants, which is, if I have eggs and you have a bicycle, and I want a bicycle, I have to hope you want eggs, in order to get the bicycle, and if you don't, then I'm out of luck. And there's actually, it's a triple coincidence, because there's also the time issue. You might actually want eggs, but not right now, and so how am I going to get that bike from you? So what people start to do is acquire a different good that they can have simply for the purposes of indirectly exchanging for something later. So, you know, I might find out that you actually want apples, and I can find someone who is selling apples for eggs, and I can get those, not because I want the apples, but simply because you do. And as more people start to engage in this kind of behavior, goods start to emerge that are actually really good for that specific purpose of acquiring just for indirect exchange. This is what we call medium of exchange. And as liquidity and saleability, basically like how many people want to buy it, how easily can you get rid of it on the market for another thing. As it increases, it becomes what we call money. Money we could really call like the most saleable liquid good in the economy. And it's good because it lowers the transaction cost of exchange, because you don't always have to find this constant network of people to trade with. You can always just get the one good and be able to go, you can go buy anything you want with dollars, basically in the world. Money then is a tool for economic calculation and profit and loss and social coordination, because people can start to look at how good their behavior on the market is based on whether or not they're able to acquire this good that they can trade for other things later, and also lets them, you know, by engaging in more indirect exchange with more people, you have a bigger ability for division of labor and production, so the market can make all of the wonderful things that make life worth living. Now, a lot of people think that money is some kind of collective fiction. You'll think, you know, because it only has value because people believe in it, therefore it's a sort of like made up social construct. And to some degree that, I mean, that is true. Like there's no such thing as intrinsic value in the world. Everything only has a value because someone wants it for something. However, that doesn't mean that every good is equal at fulfilling that capability of being that ultimate, you know, monetary good that everyone can be using. There are certain things that you need in that monetary good in order to be able to make use of it at such a large scale. And a lot of these qualities are things like scarcity. You know, how hard is it to find? How rivalrous is it? How durable it is? Fungibility. So fungibility is you know, if you want units to be equal, so that if you get you probably don't look at the serial number on a dollar bill. You just get a dollar bill, and that works. If you had to worry about specifically what kind of dollar bill you got relative for the amount, obviously, that would be an issue for being able to trade, because then you'd have to, you want to be able to get rid of any dollar. Portability, you want to be able to move things around easily. Divisibility, obviously, like there's a problem if you're using a gold coin and something only costs like a penny. Like how are you, you know, go and shave off some atoms at the point of sale? It's not going to work very well. And also unforgeability, so making sure that people can't just make counterfeit goods. So there is a concept of something called sound money. So, and what sound money really is something we call hard money. Hard money is a monetary good that is very hard to produce, very scarce, and as unforgeable as possible, while easy money is something that's easy to produce, and at best it's only scarce by choice, and it's highly forgeable. So something like that with the US dollar is relatively scarce. It can be difficult to counterfeit, but at the same time, the only reason there's a certain number of it recognized by the US government at any given time is because the US government says this is how many units on the market, and so they as the money printers can forge it or make it less scarce at any point. And a problem with monetary goods, and the reason you want this hard money is the fact that everyone in a monetary network wants to be a money printer if they can. And so you need to find ways to keep them from being able to do that. Everyone wants to be Rumpelstiltskin and create gold out of thin air. Everyone wants to be, Janet Yellen and hit the print button and have the new dollars come to them. Everyone wants to be in that position. And if you're able to get in that position, you have an unfair advantage in the marketplace, and it devalues the currency. But if you're the one who prints it, it devalues after you've been able to make use of it. So you're scamming the system, basically.
Wait a minute, you just accused the U.S. Treasury of scamming the system.
Yes.
Okay,
Yeah.
I agree. By the way.
Noted. Some problems. So we can some examples of how we can understand the problems of having an unsound money. In Africa, glass making was something that was very uncommon, and so having glass beads was a sign of great wealth. Because there's a lot of so-called proof of work to be able to go and go through the process necessary of making these beads and being able to show them off. They're rather monetized by being used for wealth transfer between generations, between tribes, etc. But in Europe, glassmaking was extremely common, and it basically cost nothing. So something that you had happen in Africa during the colonial period was that Europeans, especially in Venice, were producing tons of beads, and they were able to take them to Africa and just wipe them out economically, because they come in and they can afford to be like kings, because based on their money they were as rich as kings, or richer, and so they're sold for everything, including slaves. And so what this shows us is not only do you need a money that is sound and hard to produce within your own monetary network, you really need one that's hard for everyone, because you don't want that outsider. There just needs to be that one guy who can come in and ruin the entire thing. And so historically, gold has been the hard money that the universe coalesced around until various governments were able to find our way away from that, for both good and bad. Gold has been treasured and monetized by humans since antiquity. You can find gold coins from the Roman era, and there's a good reason for this, and it comes back to that scarcity. Gold is a very scarce good, and it has what's called a stock-to-flow ratio that is very high. Now, stock-to-flow ratio is an important concept in sound money. It's basically how much of a good do you have, and how much can you expect in the next time period. And so with gold, you get about 1% to 2% inflation every year in terms of people going out, doing new mining ventures, getting gold out of the ground and coming back, compared to most goods in basically the entire world. That is an extremely good stock-to-flow ratio, and that's why people coalesce around it. However, there's an issue with gold, and basically any physical good, which is that as people value it more, you've created more incentive to go mine and produce the good. And so certain gold mining operations that may have been unprofitable at one point, if the price of gold goes high enough, then it suddenly does become profitable, and you bring new units into the market. There was a problem in during kind of the Columbian era of the Spanish coming to the New World, and they got a ton of gold. And when they brought it back to the market, once again, they come in with this thing that was supposed to be extremely hard to produce, and they dump it on the market, and it causes a big shock in the market. So we've kind of covered the globe, but at the same time, if we continue to monetize gold, you would still run into this problem, and in the future you could have, for instance, asteroid mining, and you come across one asteroid that has a lot of gold, and you've now doubled the amount of gold, or something like that. I don't know the exact numbers, but the point is you could flood the market with a new amount of gold, and this causes deep disturbances in the sound mining properties, the hardness of the gold. So that's okay, because this problem was completely solved in 2009 by Bitcoin, when Satoshi Nakamoto created the hardest money in human history. So before we get to that, I'm sure everyone here kind of has a grasp on Bitcoin mining, but I still want to go over it a little bit. So Bitcoin mining is the process of creating a decentralized consensus. So it's the way that we can keep Bitcoin a decentralized protocol so that no one individual or group can change anything about the system. It has to be a sort of universal consent. So a miner gets new transactions on the network, bundles them together in what's called a block, and puts a proof of work stamp on it to try to get it accepted by everyone. And a proof of work is a very objective economic signal of opportunity cost that anyone in the world can easily verify. It costs, tons of money to be able to produce a Bitcoin block today, but it takes my computer, a nanosecond to actually, check that proof of work to see if it's valid, and then, a little longer to check all of the transactions within it. So it's very easy for everyone to verify, but it's a strong cost, because in order to produce that proof of stamp, you're trying to basically brute force randomness using a hash function. It's like asking someone to flip a quarter, so many times heads in a row. It's a very difficult problem, and then it scales up to you have Chinese warehouses of miners, and this helps create the decentralized consensus also by basically forcing people to have to play honest if they want to make any money off it, because if people don't follow their block that they created, they've completely wasted that electricity. It's very costly. So anyway, when we get to the actual sound,
I don't get it.
You don't get it? Okay. It's a very long question. We can talk about resources to learn more about the technicals of how mining works. For the purposes of now, you should believe that nerds figured out how to create a decentralized consensus with these computers that are having to do a lot of brute force. So they're having to pour a ton of electricity in it, and it creates this consensus. And later on, you and I can discuss how it actually works. So the question is, why would you want to be pouring all of that electricity into the network in the first place? And the answer is clear. It's the best incentive there is. It's just money. So each block comes with a block reward. It's hard-coded into the network that it started with 50 Bitcoins per block, and then halves every 4 years. And then you also get transaction fees that people choose to attach to their transaction to compete for the block space. So today, miners receive 12.5 Bitcoins per block. In about 2 years, that'll go down to 6.25, et cetera, until 0. So this is actually the code in the Bitcoin Core source code, and this is all my computer has to run in order to keep the miners in check, to make sure that they're producing new units the way they're supposed to be producing new units. So once again, it takes an entire giant warehouse of Chinese miners of chips built for nothing more than Bitcoin mining, and yet all it takes is a couple lines of code to say yes or no. So it's quite powerful. And what does this mean? It means that we come to the most beautiful graph of all time. This is the Bitcoin inflation chart over time, and this is the ideal monetary policy. You might not like it, but this is what peak money supply targeting looks like. So there will never be more than 21 million coins, and that's just how it is. So no matter how many more ASICs people throw at it, that will be the case.
May I ask a question? So how do you increase blocks if you only have 21 million Bitcoins?
Say that again. How do you?
So you said you produce new blocks.
Yeah.
How do you do that if you only have 21?
Right. So in the future, it's expected that transaction fees will be able to fill that void. And I'll be going into that a little bit more later in the talk. The reason that an additional property that allows for this is something called the difficulty adjustment. And I do believe when they finally give Satoshi Nakamoto the Nobel Prize in Economics, it'll be because of the difficulty adjustment that he gets it for. Because anyone can come up with a scheme for having a fixed supply. I've dreamed about it for years. But only Satoshi Nakamoto was the person who put all the pieces together to give us what it takes to actually produce that. So as I said, the supply halves over time, but you also have this problem of if a bunch of people show up with those ASICs and they just start doing things faster, then they can try to get all of the Bitcoins up front early before everyone else can even compete for it. So what the difficulty adjustment does is looks at the network over the past 2 weeks and says, did these blocks come sooner or later than the 2 weeks that we were expecting? If it came sooner than the 2 weeks, it means that the difficulty, the requirements that we ask for in that proof of work is too low, so go ahead and raise it. If it came too slow, then go ahead and lower the difficulty. And so because of this, we have a supply curve that is not only strict in terms of where it targets at 21 million, but it's also completely statistically predictable. We know you can give me a time in the future, and with statistical probability, I can tell you the exact amount of Bitcoins that are going to be on the market.
What's the variance in that probability?
That is a good question. I don't have that answer for you.
I would assume it's pretty low, right?
In terms of, sorry, it's been a while since I've taken a statistics class, so I'm trying to remember the variance specifically.
Deviation, deviations.
Well, I should have included a chart of the hash rate, and it's gone up tremendously. So that really depends on sort of the price of Bitcoin. Incentivizing those new mining ventures. Sometimes there's going to be a large rise, and so there's going to be a ton of people that pour in to try to mine Bitcoins, while sometimes there might only be a few people, and sometimes there might be, there's also going to be a mix of people who turn off their machines because it's no longer profitable. So that's more of dependent on the market as opposed to something that's hard-coded into that. So it's sort of a more empirical question of how the network's actually operating. So this, once again, is a piece of code. This is from the proof of work code in pow.cpp, in the source code. And once again, this is a very simple piece of code that's able to check this. And so your computer is able to place very extreme restrictions on the outside world of what it takes to create more money according to you and the other people you agree with on sort of what Bitcoin is. While once again, it doesn't matter how much production inputs they try to make, you have full control over staking down, putting your foot in the ground, saying it's only 21 million. So why does this matter at all? So remember, money is a tool for economic calculation and social coordination. You need this good to be able to say, am I doing something right in the market or wrong in the market? Did I increase the amount of money that I hold, or did I decrease it? And you need to be able to have this sound thing that you can coordinate with people on, so that you can make agreements with people about the structures of production over a long period of time. So the longer into the future that we can expect a monetary good to fit those properties that we talked about, and the more distant into the future you can begin thinking about the economic calculations that you make. Meaning you can use something as a store of value, And you can start to think not just in terms of like, you know, in the next week I'm going to make money or lose money. In the next year or decade or more, am I going to be profitable or lose money? And we're also going to talk about sound money being a sound basis for international trade. So store of value and medium of exchange and unit of account, these are a lot of you know, terms that you see people argue about, including myself on Twitter all the time, saying, oh, Bitcoin's supposed to be a medium of exchange, Bitcoin's supposed to be a store of value, et cetera, Bitcoin's not a unit of account yet. These terms are used as separate concepts, but really they're describing the same thing, which you can boil down to as medium of exchange, but once again, people get tripped up on these things. So it depends on who you're talking to, you know, what they'll actually agree with you on in terms of the semantics. But medium of exchange is a good acquired for indirect exchange, while medium of exchange is not meaning a method of payment. This is oftentimes when you hear people saying Bitcoin is actually a medium of exchange, what they're saying is that Bitcoin is a good that you go to Starbucks to spend on coffee. However, and it's not a store of value, a so-called just digital gold that you're hoarding away. The problem with the statement is store of value is medium of exchange. It's medium of exchange over time. So it's you know, trading future value of money for present value of money. And so when you are storing it, you're putting it away to use as a medium of exchange because you expect in the future to be able to divest in the currency for some good. But medium of exchange does not mean that you have to be investing, you're buying the good to buy something else at this moment. And that's something that a lot of people trip up on. Unit of account is merely, you know, what is on the balance sheet? What are you denominating that profit and loss in? And so a lot of people say Bitcoin is not a unit of account yet, and they actually think that's sort of the distant future. But in many ways, Bitcoin hodlers already use it as a unit of account because they think to themselves when they go to the store, you know, and they buy a coffee, they're thinking like, oh, how many Bitcoins am I not getting because I just bought this coffee? Turns out to be a very, very high future value that they're giving up. So these people are already using Bitcoin as a unit of account in some way. It will take a long time for people to be sort of using a unit of account together, as in things being priced in Bitcoin when you go to Starbucks. So a little more on store of value. So we talked about how money is not a collective fiction. Not anything can be a good monetary good. But anything can be a medium of exchange. You know, you could get those apples to trade with the guy. You can use baseball cards or Beanie Babies, whatever you want, whatever it takes to purchase for the purpose of purchasing something else. That is a medium of exchange. However, it's the good that can be used for that long-term economic calculation, that store of value, that actually gives it its long-term value. Because in order to trade a good, you have to actually expect that someone will want it. So the only reason you in our example earlier that you got apples was because you thought that the guy selling a bike would actually want apples in the future. So people who are using Bitcoin as a store of value now, what they're saying is they believe that in the future everyone will want Bitcoins, and so they're wanting to invest in it now because they want to profit off that, you know, the difference of what the future value of Bitcoins are in such a world versus what it is now. Because Bitcoin is the hardest money in human history, and there's nothing that can possibly compare with it except for maybe even in terms of resources in the universe. Pretty much the only thing that compares to it in terms of scarcity is time itself. And so because of this hardness and its ability to hold up on all these other fronts in terms, you know, durability, portability, etc., because it's able to fulfill all that, it has extremely good prospects for a store of value. There's extremely good reason to believe that given you understand, you know, the security needs of Bitcoin, that you can stuff it under your mattress, so to speak, and leave it there for 100 years for great grandkids to dig out, and they'll have a good that they can go spend somewhere. And so there's very good reason to want to have Bitcoin as a good for long-term economic calculation. People who understand this and take it very seriously, we call those hodlers of last resort. So those are people who have a strong ideological bent with Bitcoin, such that they believe that Bitcoin is going to go there, and because Bitcoin is going to go there, they're not going to give up their Bitcoins for anything. These people with such a strong store of value mentality, they're the people who give a monetary good its sort of baseline value in the first place. Because you know that no matter what happens in the market, in order to trade a good, we have to expect that someone's going to demand it. No matter what happens in the market, even if it crashes to $1 for everyone else, those hodlers of last resort are still going to want it. And so basically, I cannot imagine Bitcoin ever going to $0 because those people exist. Meanwhile, a lot of other goods, like I don't think Beanie Babies have crashed to zero, but they're obviously not doing so well in the market, and I don't know of people who are collecting them en masse the way Bitcoin is. So Bitcoin is clearly a better store of value than that, and I'd say than a lot of other goods as well. So a question that comes up a lot is why a fixed supply of 0 as opposed to, for instance, a slight inflationary monetary policy to pay for network security. So his question earlier was about what happens when the block reward is 0 minus the transaction fees. Well, we have to hope that transaction fees are high enough to pay for this. This is a question that we'll have to see what comes in the future. But before then, there's some very good reasons why you would want it to be this now. So one is shelling points matter. So the reason that Bitcoin or any monetary good is good and valuable is because everyone has coalesced on a shelling point. They've all sort of agreed that this is the way it should be. So everyone who comes into Bitcoin, there's no doubts about it, what the Bitcoin monetary policy is. Everyone pretty much knows the meme 21 million. That being said, if you go to, for instance, like Ethereum or something, I literally don't know what the monetary policy of Ethereum is. Now, someone might know the secrets, and I'd like you to enlighten me. But generally speaking, it's a very hard question to answer, even just simply what is the monetary policy of Ethereum. And likewise, I don't want to just rag on Ethereum, also the US dollar and every other fiat currency. So I don't know what the Fed is going to do tomorrow. When you have that shelling point of 21 million, everyone knows and no one's going to change their mind. The network could technically change it, but everyone comes into it with a certain expectation and it's going to stay that way. If there is the idea that in the future, you can change it to whatever you want, well, once we've decided, oh, we should make it 1%, I think 1%. Well, if you remember, everyone wants to be a money printer, so if they think they can be the money printer, they're going to think, well, why not 2%? Why not 5%? And what you've done is opened up a political attack surface where now there's more to argue about and there's more to find ways to fragment the monetary network as opposed to making it stronger. So another point is that anything with a better monetary policy, that is a harder money that's able to maintain its hardness, is going to be strictly superior because you as an investor, just by economic reality, unless you have some specific ideological reason, you will not want to hold a money that gets devalued over time. You'll want to hold a money that increases in value over time. So ceteris paribus, a Bitcoin with 1% monetary policy cannot compete with a Bitcoin with 0% inflation because Einstein supposedly said, how compound interest is the greatest force in the universe, that 1% over time becomes, soon enough, 40% of your value has gone away. And the Federal Reserve tells us, oh, don't worry, it's only 2% inflation or whatever. But the money that you wanted to pass down to your grandkids has gone from $100 to $2 or whatever it is. So something that does not, even that small amount can have profound effects in the long term in terms of what people want to invest in. So with Bitcoin, it could be the case that in the future we find that a transaction fee market simply isn't enough to keep the network secure. I'm willing to imagine such a scenario. I hope that doesn't come about, because these are not easy conversations and problems to solve. Part of this, we don't have to think like the Fed anymore and sit around and try to imagine we know how the economy ought to operate. So the more we can stay away from these questions, the better. So the very idea, when it has to come, it is a Faustian bargain. In Faust Part 2 by Goethe, the devil himself, basically, in the form of, I can never pronounce this correctly, but Mephistopheles, comes and lures the court with the prospect of paper money, basically for the purposes of enriching themselves at the expense of others. This is that Faustian bargain to give in to the money printers' imperative and their desires. When we can see many times how that has ruined the economy. So when it comes to this, what we want to do is take the precautionary principle and, as long as we can, hold on to this until it's absolutely necessary to do this. Because once you open that Pandora's box, you cannot close it. So once you've moved away from that 0%, you've opened that Pandora's box, and now you have forever endless debate over what it ought to be. So moving on, an important concept in economics is something called time preference. And time preference is how much you prefer present goods to future goods. And everyone has a positive time preference. Everyone wants everything now rather than later. That being said, different people have different time preferences and different future orientations. So some people are willing to delay gratification now because they know that if they invest their goods now, they can get more later. So I'm sure you've heard of the marshmallow test before, where they give a kid a marshmallow and they say, you can eat this, but if you wait 5 minutes, we'll give you 2 marshmallows. And so the kid, they wait, and they just hold tight, they get 2. When you have a lower time preference and a lower societal time preference, it means that you can plan more in the future, you can do more with your capital to get the most future economic output. This is what Hans Hermann Hoppe, one of my favorite economists, calls the process of civilization. Basically, the more you can look into the future and make decisions based on future orientation as opposed to wanting things now, the more you can grow your capital stock, the more you can invest in larger projects, and the more you can build wonderful things. So the problem is, when you have an unsound money, you have high time preference. So if a currency can just be devalued, if the money printers can just hit a button and increase the supply by double it or whatever overnight, it makes it completely untenable, unreasonable to hold on to the money. And you're going to look for every way you can to get rid of it as fast as possible. This is a picture from a grocery store in Venezuela. Venezuela has been under the tyranny of a socialist regime that has decimated the country primarily through its monetary policy. First and foremost, they've completely devalued their money, and now people don't want to just, well, I'll hold on and I'll get more groceries later. It's like, no, let me just get everything I can possibly get now, because if I wait until tomorrow, this won't even be worth anything. You can go look up pictures of Weimar Germany when they were using banknotes as wallpaper, and they were making bricks and using it as toys for children, and they were, burning the money just to keep warm, because the warmth from a huge pile of money was more valuable than the money itself. I've heard stories of someone trying to go to a bank with a wheelbarrow full of cash to get what they possibly can or whatever. Someone comes, they steal the wheelbarrow, but before they run off, they dump all the money out because they can get away quicker without the money in it, and it's not like the money's worth anything anyway. So when you're living in a society like that, it's basically impossible to have any savings. To give you an idea, in Venezuela, someone did the math. When Bitcoin went from 17,000 or more or whatever down to its low at 6,000 or whatever it was, if someone in Venezuela had purchased at the peak and sold at the bottom, they still would have made an impressive profit because their own currency had been devalued that much in such a short period of time. So people in Venezuela can obviously not think in terms of what can I do with this money tomorrow. They have to think in terms of what can I do with this money right this instant. And unfortunately, that's you can't progress much when you're living in such a situation. I hope things get better there and elsewhere. We clearly have our money devalued at a very slow pace, so we're still able to do good things. Of course, we ourselves can do much better as well. So, however, when you have some money, you have low time preference because the opposite's the case. You know that Bitcoin is basically a deflationary currency, meaning that because it's a strict supply, if there's an increase in demand for it, there's economic growth, then the value of that currency goes up. So someone has the incentive simply to hold on to the money and benefit from having a higher price later. So they can just stuff the money under the mattress for later. So those people can plan more for the future. And they can start investing in very long-term projects. Cathedrals like Il Duomo in Florence, like these things are massive undertakings, and is not something that you can just plan overnight. You have to know you have the economic stability and expected economic output to plan these things out, and only with a sound of money can you achieve such things.
Question: you ever heard of Gresham's law?
Yes.
Because you just described it, and 99% of economists don't even know what the hell it is. That's the fucking problem. My nephew went to Yale, graduated in economics. He didn't know what Gresham's law was.
Yeah. So does everyone know what Gresham's law is? Okay. So Gresham's law is that I guess it's bad money drives out good, but that's in the case where a government places they basically price fix two monies and say that the dollar, the word dollar means like a 20th. It's a 20th of an ounce of gold. That's what a dollar bill is supposed to represent. And if you look at the really old ones, it basically explicitly says on it that this is what you can exchange it for. Obviously today, a dollar is nowhere near that thing, but when they fix those prices, you can basically kind of force people into using the less good money as their savings and medium of exchange rather than the good one.
Basically, it's shitty money crowds out good money. So before 1965, quarters, dimes, whatever, half dollars had 90% silver content. So today, a quarter that was minted in '64 is worth a few dollars. So people like me will hoard it. So the good money gets buried underground, black market style, whereas the shitty money gets recirculated. You spend it because it's not going to be worth shit tomorrow.
And meanwhile, pennies and nickels are worth, like the metal within are worth less than the nickel and penny itself. The reverse of that is something called Thayer's law, which says that good money drives out bad in a free market situation. And that's what Bitcoin is, because now people can recognize that Bitcoin offers a better economic future for them, so they can start putting their savings in Bitcoin. So when people ask me, oh, do you spend, they actually try to say like, I'm not a good Bitcoin maximalist because I don't spend I don't spend Bitcoins to get my ribeyes. However, I'm saving my Bitcoins and I'm getting rid of the dollars that I don't want. And so actually, over time when I spend those dollars, Bitcoin is taking up more of my sort of economic existence. And so that's the reverse, and that'll be how Bitcoin helps take over. So when it comes to international trade, the other thing is, in order to do business with people all around the world, you need to be able to know that you can actually coordinate with them. If you live in a world like we do, where there's trade wars and tariffs and all these kinds of things, it makes it very uncertain if doing business with someone in a certain place is going to work out very well, because something might happen tomorrow such that y'all can't trade anymore at all. Someone devalues their money to try to compete with something, they throw up a big tariff or whatever. There's a great talk, so when they were trying to move off the gold standard, former president of France, Charles de Gaulle, in 1965 had a fantastic little talk about the need for a sound basis of international trade. At the time he was talking about gold, but had he been around today, I'm sure he would have been talking about Bitcoin. If everyone in the world has converged on a single medium of exchange, then it makes it harder for a government to be able to devalue that currency relative to the other currency, such as to make it more uncertain for those people and more difficult for them to be able to do trade. So when you have a sound money and a sound international money, like Bitcoin is, you can do more trade among each other. And I think that is a very important thing going forward in our very globalized world. When it comes to competition for money, I would say that Bitcoin is an unstoppable force. So monetary competition is extremely brutal and also nonlinear. It's a very exponential process. So the universe sort of pushes for one money. The universe wants one money. The reason we don't have one money today, we used to, it was gold. The reason we don't today is because governments have succeeded at imposing legal tender laws so that we're sort of forced in different jurisdictions to use a particular currency. However, Bitcoin obviates that because there's nothing they can do about it. Anyone in the world can put Bitcoin into savings, and that's just that. And they can try to stop it. I don't think they will try to stop it, actually. I think they'll just kind of give in. But monetary networks are exponential. The more people are using it, it increases the amount of trades possible within a people at an exponential rate. So if you have two currencies, say of the same size, but then one new person just chooses one, or one person switches sides, then one of them has now sort of doubled in value, while the other has gone down double. So it's a very exponential thing, and so you get a feedback loop of people demanding a good more as a store of value, the price rising, mining becoming more profitable, and more processing power goes into that process, which secures it more, which only makes it an even more attractive store of value, such that people just start switching sides. And this might happen at the margin. People might start and just put a couple of dollars in, and then as they see this Bitcoin thing doesn't go away, maybe they'll put a couple $100 in, and then over time the price rises and suddenly it's 99% of their net worth when they weren't even looking. And this is how it goes. But in order to compete with this, you need something that can not only, there is no sort of niche currency in the sense of taking up 40%. It's not like one currency is 60% of the market and one currency is 40%. If the free market has its way, one currency will just dominate the rest. There might be niche currencies because people hold on to various ideological positions, and maybe they want to just in their community use a specific money. Although that's extremely risky, because if it's not as secure as Bitcoin, you have that same money printer problem that we described earlier, where their glass beads are just going to get wrecked. And so if you don't give in to that best global money, you put yourself at serious economic disadvantage and extreme risks. So because of this, I actually don't view Bitcoin as really having any competitors at all, because Bitcoin is the only currency in the world with such a strict monetary policy and such a strict, and capable ability of keeping that monetary policy intact and strong. Well, nothing else comes close. The dollar is bigger, but that's for historical circumstances, and I think that can be overcome. So, that brings us to the topic of altcoins. Now, the technical term is shitcoins. It's a scientific term, but no altcoin is as decentralized as Bitcoin. And the purpose of people use the word decentralized for a lot of things now. It's like, decentralize all the things. We need to decentralize Uber. We need to decentralize this and that. It's important to remember what the purpose of decentralization is, because decentralization is not inherently good or bad. So, it's actually, some things are good to be centralized because you can achieve a lot by centralizing. Amazon has been able to give us an incredible, review system and reputation system for products that no one has been able to solve in a real decentralized way. And it's something that maybe it'll happen in the future. It'd be great. But at the moment, I haven't seen a good solution except the centralized solution. So I'm actually happy that people have taken charge and taken that centralized solution all the way and done great things with it. The purpose of Bitcoin decentralization is to secure that monetary policy, because the less decentralized it is, the more that individuals can choose to change that monetary policy and threaten its ability to act as a monetary good. So
I just got a question for you real quick. I know you're kind of like Bitcoin maximalist.
A little bit.
And some people may understand this question, some may not. Bitmain just released quarterly reports that they did $1.1 billion in revenue.
Yeah.
When the value of Bitcoin mining the last quarter was only $1.3 billion. Do you think Bitcoin is truly decentralized more than any other cryptocurrency versus Vertcoin, which is ASIC resistant?
I don't view ASIC resistance as a decentralizing force. It can actually, in the long run, be quite the opposite. So when you have ASICs, it forces the producer to have a very strong economic signal and opportunity cost. So if someone was using GPUs to mine Bitcoins, as they used to, but using some other altcoin, if they're no longer able to mine, they can go back to playing video games. And so it doesn't cost them as much to take part in this process. But when you force people to produce tons of ASICs, they're having to put more skin in the game in the network, and they have a lot more to lose if things go bad.
But you don't have a problem with them controlling that much of the mining?
It's not ideal, but we have to see where the market will go. But the next bullet point that I want to cover was something that goes into this, which no other coin has faced something like user-activated soft forks and the No 2x movement. So raise your hand if you know what either of those are. Okay, so a couple people. So fun story. So basically, the user-activated soft fork was basically users of the network saying, we want a feature, even if you guys don't want to give it. There was a feature called segregated witness that removes transaction malleability, which is a problem with the way Bitcoin transactions were from the beginning. Segregated witness solved it. It opened up new venues for scaling, both in terms of the actual how much can go into a block, but also what kind of innovations Bitcoin is capable of. So things like Schnorr signatures, which is an amazing improvement on the way we do the digital signatures in Bitcoin. That's a possibility now. And there's all these things that our Lightning Network is made possible by having segregated witness. So it was something that it was a good upgrade, and most of the community, pretty much all the community, agreed that it was a great improvement and wanted it. However, entities like Bitmain were pushing back against it. They wanted that there was a so-called agreement with corporate entities saying, okay, we'll go ahead and do this, but only if we double the block size limit, which is good for them, not necessarily good for everyone else. So what the community ended up doing was something called a user-activated soft fork, where they switched on their software. We saw the small pieces of code. They were able to do that, and as a community, put pressure on the miners to bend the knee to them. So even though Bitmain is such an incredibly large company, they had to start supporting segregated witness because the Bitcoin network wanted it. Likewise with No2x, after this happened, they were like, well, you guys agreed that we have to now double the block size limit, but everyone was like, no, there was no agreement. That was made by corporate entities, not the network itself. So there was a huge coordinated me more, as well as just the futures markets clearly showed that no one wanted it. And once again, the miners were not able to change that despite wanting it, and despite having such large warehouses of ASICs, they can't fight the code of the network. So because of that, and there's prospects of Bitcoin mining becoming more decentralized over time. With Dragon Mint, there's I know people working on new impressive mining facilities here in the United States, including here in Texas. It's still early in the game, and I tend to be very hopeful. And so far, despite having what seems like a lot of power, Bitmain has not been able to wield control over the network, and I think that's a huge testament that even a company that can get so large and look like it can wield so much cannot change the function of Bitcoin. No other coin, I'll get to you in a second, no other coin out there has faced something like this, and so we simply don't know if they can stand up to it. I happen to believe that no other coin can stand up to it, but Bitcoin has proven itself. And I think these two stories are very much looking into. There's an article by Jimmy Song about the SegWit 2x bugs that explain kind of like a post-mortem on this. And I think it's an absolutely necessary story to understand to see where Bitcoin is going now.
Just curious on your thoughts on this. So as you're explaining kind of right now, it's very decentralized, even large mining can't gain that much control, but there's still mining to be done, yes. Right? So as the mining starts to close, and as Bitcoin does become a gold standard, so to speak, and as governments do start getting, and big banks do start getting more involved in this as they see they can't stop it, how does Bitcoin hedge against them coming in and taking control of the whole network?
Yeah, so good question. So first of all, just a clarification, mining never ends. There will always be mining. It'll be just that at a certain point, the block reward is much lower, and they'll only be getting rewarded by the fees. But as those people come in, you have to remember that Bitcoin is full of hodlers of last resort. People who have been in Bitcoin since, forever. Trace Mayer is probably the king of the hodlers of last resort. He's the one who came up with the term. He got into Bitcoin publicly when Bitcoin was worth 5 cents, and he is stuck with it. So if you think, do the math, a couple $1,000s at 5 cents, the guy has a lot. So if the government, if government entities want to come in order to get it, they have to be able to actually acquire Bitcoins.
Right, and that, I'm sorry, I didn't mean to ask before. Is there any prediction on what that percentage of hodlers is?
That's a good question. I don't have good empirical data, but there's a lot of Bitcoins in the hands of people who care a lot about Bitcoin. So
there's probably only a couple million floating in circulation. 4 million are lost, right? Not lost, but
yes, that's true. Like a good percentage of the network is likely inaccessible at all. So anyway, I'm not concerned about that because by the time they get in, we're gonna be richer than the U.S. government. Believe me. They'll be begging us to help refinance their stuff.
But what about the transaction approval? So this is where you get to where the government can own most of the transaction approving miners, and they can affect the network at that point.
The mining, you mean?
well, let's say there's 20, less than 21 million out there, or even 20 million out there. If they are approving transactions at least 51% or more of the approver nodes out there as a government entity, they can affect the network.
So if they are able to acquire 51% of the mining capacity, then they'd be able to, be able to censor certain things. However, every day that they're not doing that, it gets much more expensive. So I would recommend, if the government is interested in a coordinated attack like that, that they go get a time machine, go back to, say 2012 or before, and start working on it then, because and get ASICs at the beginning, because until now, Bitmain would be a concern because the Chinese government could take control of that. But because anyone can enter the Bitcoin mining space, if anyone ever comes up, as the price rises, certain opportunities that were once not profitable suddenly become profitable. So my question is, at what point does just building your own thorium reactor just to hook up to a Bitcoin miner, when does that become profitable? When does doing some really crazy stuff with energy innovation become profitable to tie to Bitcoin mining? And when you do that, it becomes anyone can just find these things, and Bitcoin, it's like Jurassic Park, like Bitcoin finds a way. Like energy, the energy market will just work its way out, and just Bitcoin will subsume it, and that will subsume it everywhere. It doesn't keep me up at night. It certainly it'll be interesting what the government might come up with as far as the actual full nodes. Having a full node only matters if you're using it for economic transactions. So if hodlers of last resort are just using their own full nodes, and the government full nodes are trying to do something fishy, we won't even be paying attention. They'll be just doing things into the void. If they're mining blocks that are not following the rules we like, we won't even hear it. And so they're just wasting their resources.
So you just basically take down a Lightning Network, because that's the whole point of the Lightning Network, is to make it transactional, right?
What about the Lightning Network?
It's supposed to be used to help Bitcoin as a layer on top to help with transactional.
Sure.
But if the government, you just basically said, we're not using it for transactional, we're using it for hodling. So you can't have both.
I'm not sure I understand the question. The point is, once again, the government would have to acquire Bitcoins in order to do that. But even then, they can't. You would have to come up with an attack vector of how they can actually stop people from making use of the Lightning Network in that capacity. But if I could go ahead and finish, I have 1 or 2 slides left, and then we can get to the rest of questions. So the point with all of this, Bitcoin has really proven itself, and very few others have. Many of them either don't have monetary policies at all, like things like Ethereum, or they have monetary policies like Bitcoin Cash, but we're not sure if it can actually maintain it. So for instance, with Bitcoin Cash, they have much larger blocks. There's a question whether or not, when it comes to transaction fees and long-term securing the network, if blocks are very large, there's going to be a race to the bottom with transaction fees, and it's an open question if there would be enough reward for the miners at all. And meanwhile, it'll be much more expensive for hodlers to run their own full nodes to be able to exert their own rules onto the network, thus maintaining that decentralization, and thus who gets to even control anything on it if you've bought into that system. So because of this, I believe that Bitcoin will continue to dominate as a store of value. It is simply the best. It has the best prospects of a store of value of literally any resource in human history. And over time, it'll be monetized and used on a global scale. So my conclusion of this is a tweet of mine, which is, Bitcoin will turn consumers into savers. The economy will experience a massive boon of unparalleled magnitude. Sound money is a foundational pillar of civilization, and Bitcoin restores this powerful tool for social coordination. And the experts don't know what they're talking about. So anyway, thank you very much for listening. You can follow me on Twitter at Bitstein, B-I-T-S-T-E-I-N. You can visit the Satoshi Nakamoto Institute for that, the good history, Satoshi's writings, economic analysis, etc. I co-host the Noted Bitcoin podcast with Pierre Rochard. You can follow that at noted.org. And finally, a couple reading suggestions. If you like anything about sound money and time preference, and especially Bitcoin, I absolutely recommend that anyone, even with the vaguest interest in blockchain technology, should read The Bitcoin Standard by my friend Saifuddin Ammous. It's a masterpiece, and it should be required reading. Additional books on sound money, The Ethics of Money Production by Guido Holzmann, who's an Austrian economist. It's a fantastic book that, after having read it, solidified my understanding not only of like what sound money is but also why Bitcoin. And finally, Democracy, the God That Failed by Hans Hermann Hoppe. Certainly the most interesting and my favorite political book that I've ever read, but the most important point here is that it is the best treatment on the concept of time preference and its societal implications. So I very highly recommend that book as well. So thank you so much, and happy to take more questions.
Round of applause.
Excellent presentation. Thank you very much. What do you think happens if they break SHA-256? Kind of what are the scenarios that you see?
Yeah, good question. So that is one of the few times I would absolutely support a hard fork, because it would be existential. So if SHA-256 breaks, it means that proof of work is broken, and anyone can just easily do proof of work. Whoever broke it, they probably wouldn't even necessarily like announce that they broke SHA-256 because it would be such a big monetary incentive to be mining or whatever. But it breaks that, and there's also stuff with the signatures as well. Like there's a whole bunch of stuff in Bitcoin that breaks if that happens. So if that happens, we would just have to switch to something else. I don't think it would cause problems for coins that are currently in storage. So I think those would be safe. In fact, those, from my understanding, are even safe from like quantum computing attacks. But we would have to upgrade. And I think as far as hard forks go, that would shift the shelling point of what people believe Bitcoin is very easily, because if they don't, the whole thing is over. And so I think everyone would easily, like as soon as there's an implementation that's been tested, everyone would just switch over and we'd have something new. But I don't think we'd switch over to that until there's a pretty good sign that we absolutely need to.
What do you think the signals would be that someone had broken it? Like, how would the network be able to tell?
Yeah, that's a good question. I actually haven't thought of that before. Perhaps one of it would be like if suddenly the 2-week mining process took like 1 day or less or something, there'd probably be a sign that something was going wrong. Something like that might be a strong signal, and I think everyone would, perk their eyes up and get coding.
Michael, could you repeat the questions?
Oh, yeah.
We have a live stream going.
Oh, sure. So the question was...
Well, I mean, just in general.
Okay.
What are your opinion on altcoins like Namecoin or Elastos that perform merged mining with Bitcoin? Like, do you think there's a place for those?
No. So Namecoin was interesting.
Yeah, they're like use case specific, like something that Bitcoin might not ever implement, but they're still kind of contributing to the hash power of Bitcoin and kind of part of the network.
Yeah, it's certainly interesting. Namecoin, so for those who don't know, Namecoin was actually one of the first, if not the first, forks of Bitcoin, like one of the first altcoins. And the purpose of it was to create a sort of decentralized namespace. So you could use it for a decentralized DNS system. The problem with it, the fundamental problem I see is the fact that with any of these, anything that's like so-called a blockchain requires some kind of incentive system, which is effectively going to be a currency. And because it's a currency, it's necessarily competing with Bitcoin in that way we talked about. So Namecoin simply can't compete with Bitcoin as a store of value. So, I thank them if it has any value at all, that it's helping the Bitcoin hash rate by incentivizing more mining. But I don't really have good prospect. In fact, I don't even know if Namecoin. I mean, I assume it's still around, but you don't even hear about it anymore.
Well, I guess Elastos is the bigger one because Bitmain's already come out. I think GM came out and said that they're going to devote, I forgot what percentage of their hash rate to merge mining, both of them.
Yeah, I'm not familiar with that one, so I don't know what its specific. At some point, you kind of just filter them all out until there's reason not to. And I'm not too familiar with that one, but once again, like if you can't compete with Bitcoin as a store of value, first of all, I'm not so interested. Just for the fact, the reason I got into Bitcoin was because of sound money, and so I don't really care about, like supply chain management. A lot of people are like, oh, my blockchain helps with, notarizing the supply chain management of, oil. And so I was like, cool. Like, let's put some TPS reports on the blockchain. That's so exciting. I care about the sound money. So these projects on as far as they're trying to compete, as far as they're creating a new money and trying to compete with Bitcoin, they're reinventing a wheel and paddling up shit creek as a shitcoin. And as far as the other projects they're doing, it just tends to be orthogonal to Bitcoin and is not exactly my interest. But I mean, I wish different projects the best of luck.
Back to the point of, you did make a comment on Bitmain and how that could be a concern. That's literally one facet of an entire global network that could be a concern. Mm-hmm. And Bitcoin has undergone several attacks. Servers have been hacked. I mean, and the reality is the base blockchain of Bitcoin is a ledger. Mm-hmm. And it can only be built upon and modified so much. And there is absolutely no way it's secure from quantum computing. Once that becomes a thing and actually progress to where it's actually going to go, there's no way anyone can say with certainty that quantum computing technology cannot break a security code on that blockchain.
Yeah, so the question is about whether or not Bitcoin can protect itself from quantum computing.
Or not just that, also from, again, government manipulation when it does become a larger gold standard. And one simple example of Bitmain, there's hundreds of large examples you can find.
Sure. As far as, every attack, Bitcoin has withstood all of these attacks. And I think as it grows larger, it attracts bigger and bigger attackers. And I think every stage is it's an anti-fragile system. Every time it just gets stronger and it prepares itself for the next one. So I tend to not be worried. Now, if they came in, like if the big guy came in now as opposed to way down the line, perhaps there's different vectors of attack that Bitcoin would have a harder time against. That being said, as far as quantum computing goes, this is not my area of expertise, but if you go onto the Bitcoin Stack Exchange, there's been a lot of good discussion on this. And from my understanding, there's a lot of things we can move to that would be able to withstand it. So it's not something that, it's another thing that doesn't keep me up at night. Like I said, I'm not an expert, so I can't tell you, how these different schemes work and the exact protections, but it hasn't kept me up at night.
There's a good podcast on Epicenter that actually explains how quantum won't affect Bitcoin and what they're going to do about it. So there are some experts already.
Okay, so what
Epicenter.
Podcast? So Epicenter podcast has one on
quantum,
that. Yeah. In the back.
Yeah. So this was an awesome talk.
Thank you.
What is it about, like, if you had to pick a slide or two to say, like, what is it deep in your mind you think will appeal to like mainstream Joe?
So that's an interesting question. One, I think people do want to be able to save money, and most average people that I explain, Bitcoin to, even if just the digital gold metaphor, even though I think that's a very inadequate metaphor, it does resonate with the average person. I think it doesn't take an economics PhD. I don't have any economics background except for my own reading. It doesn't take an economics PhD to understand the problems of unsound money and see how different monetary policies have affected our own behavior and from that our own culture and society. And so I think it's something I think everything in this talk, maybe not the technical stuff, is very accessible to the average person. That being said, on the other hand, I don't know that they'll necessarily be the ones that make the largest moves in how Bitcoin goes. I think a lot of them will kind of be compelled into using Bitcoin. A lot of average people, unfortunately, in this country don't actually use money as much. To people, a lot of people in this country, they barely have any savings at all. And when they get a paycheck, money is that thing that they get from work so they can take it to pay rent and pay off loans and all of this stuff. They barely get to even experience what you get to do when you save money. So hopefully some of them will do what they can to put into savings now as they see fit, although I don't want them to always work with a financial planner to find out what is the good investment scheme for you. But those people, at some point, I imagine a lot of people will just wake up one day and they'll be living in a Bitcoin world, and they won't even have had to do much to live in a much better world. But I think right now and moving forward, I think the institutional investors are going to have the largest effects on where Bitcoin goes, and people who haven't saved in it yet will get to benefit from all of that.
I've heard recently, I don't know who said it, but that Bitcoiners were, if they wanted Schnorr signatures, were kind of in for a similar fight as SegWit. And I was just interested in your kind of thoughts on that.
Yes, so that's an issue. So the question was, Schnorr signatures are going to, there's been the first Bitcoin improvement proposals referencing Schnorr signatures being implemented, and when that happens, when someone finally, they write the code and they say, hey, do you guys want it? Does the network want to activate it? It does have to go through the same soft fork process as segregated witness. The reason I don't think it's going to be a problem at all is because the Bitcoin civil war that occurred with segregated witness spawned off Bitcoin Cash. And I think that most people who did not share that vision for Bitcoin went off to do their own thing, and God bless them, have fun. Everyone that's now in Bitcoin, I think, is pretty aligned. I haven't really heard anyone dissent on Schnorr signatures at all. The only person was a non-Bitcoiner who on Twitter was saying that's 20-year-old technology. That's not even cool. But everyone else is super excited about it. So I don't expect that to be. I don't expect any kind of fight like that. I think it's actually going to probably go pretty smoothly. And by the way, if something like that doesn't happen, I'm happy with that. What I want is a sound money, and if the network says, well, we want sound money, but we don't want that one feature, Schnorr signature is not the deal breaker for me. So likewise with segregated witness, had it not happened, that would have also been good.
I guess I qualify as one of those regular people. I like the concept when I read about it, and I put a little money at the time, and now it's worth a lot more. What I'm a little disappointed as a medium of exchange, you can't say that Bitcoin is being successful. I mean, it's not used, extremely rarely used as to go buy your groceries, to go buy your whatever, or pay your bills or anything. There's no app yet that is useful compared to, I don't know, Apple Money or whatever they call it, Apple Wallet.
Apple Pay, yeah.
Right, and all of these other.
Yeah, Visa, PayPal.
Right, and Venmo and all of that. So when do you think that's going to happen? Because don't you think that would increase the velocity of Bitcoin money as a medium exchange and make it more available?
Right, so this goes back to something that I talked about. So by the way, the question was, people don't use Bitcoin as a method of payment now, so is that sort of a negative effect on Bitcoin, and when do we think that will change? So going back, first of all, once again, medium of exchange is not the same as method of payment, and I do hope that people can fix the terminology a little bit, because it's a very different concept. You are correct, people don't use Bitcoin as a method of payment. Quite honestly, I hardly use Bitcoin as a method of payment at all. For me, Visa, Apple Pay, all these things are better in every way, and I get to get rid of my dollars and keep my Bitcoins. There's also certain tax problems that hold this back, and I do hope the IRS fixes that. But right now, if Bitcoin has the trajectory that I think it has, and a lot of other people think it has, Bitcoin is going to be worth a lot. Right now it's at about 8,000, but a bearish number would be like 10 million. You know, there's really, I actually think that it's hard to know just how much Bitcoin can be worth, because humanity has never had a currency this powerful. When we talk about gold, we're talking about a strictly inferior money. So when people say, oh, we can go to X amount if it just replaces gold, well, it's better than gold, so it's going to go more than that. Oh, well, if it replaces the dollar, well, the dollar is not that great of a money. It's going to be better than that. And there's also all of the problems just with fiat and credit expansion. All these things like totally distort the market. So when you have a market able to coalesce around a sound money, we're talking about something crazy valuable. So with that in mind, no one has the incentive to spend it right now, and I don't think that's the problem. I think the important thing is for people to understand what is valuable about this thing, which is, like I said, the ability to allow us to do long-term economic calculation and savings, and not have a devalued currency and one with fractional reserve banking and all these other things. And so the method of payment stuff, that will come later. I don't know when, but until people no longer have that incentive to do extreme hodling, they're going to choose to spend whatever other money they can. So when that runs out, they'll have to spend their Bitcoins. Until then, perhaps a Lightning app will come out that is so cool, and you can literally only use Lightning to pay for it, so people want to use it then. But the other thing, like at someday, like maybe you'll even still use Apple Pay and Visa and PayPal. It'll just be denominated in Bitcoin instead of dollars. But the point now is the best thing you can do is to save, and so that's just what people do.
But this was Square is authorizing and transactions in Bitcoin as it is, and a couple of other one Dash and Square. My other concern is, aren't you concerned that the big guys, the big one, the governments and the Wall Street people and the major people that would get hurt by Bitcoin, don't you think they're manipulating the Bitcoin market right now in the CBOE and the futures and all of that to crash it?
Well, they did that in September of 2017 when Jamie Dimon made it go down 25% by saying it was a fraud. I mean, you see that all the time. You can go on to Ripple in January and you watch some fat guy talk about XPR.
What's up?
Like, it happens. You're not going to get away from that. You're never. I mean, since the market began, you're never going to get away from that. So if you think that by owning an asset, you're going to get away from manipulation, you're not. So you might not want to own the asset. And the point of having that asset isn't the point of your spend at this point. You said it yourself. You answered your own question. You purchased it, and it's gone up quite significally. So it's a saving.
Yeah.
I mean,
Right.
Perhaps consider that when if you were to spend your Bitcoins, that you yourself were the victim of that manipulation. Yeah. Because if these guys are smart people, I know there's a lot of people on Wall Street and within government that they get. I think they would agree with a lot of this talk. And if they agree with a lot of this talk, they see the same trajectory, and they're thinking to themselves, how can I get some cheap coins? And so since no one can be the money printer and just make up new coins, the way you have to do it is by convincing others to give up their coins at a low price. So I wrote an article about 4 years ago now called Everyone's a Scammer, and it's about this. Like, everyone in Bitcoin is a scammer trying to scam you out of your cheap coins. And yes, like some of it might be in the form of market manipulation, where you try to like maybe put out some bad news that you think will bring the Bitcoin price a little down so you can get some more Bitcoins before it goes back up. And everyone's kind of playing this real politic warfare in Bitcoin. And it's something to consider. So you have to think, what is it that I'm in Bitcoin for in the first place? For me, it's the sound money. So just being able to spend my Bitcoins at Starbucks is not enough for me. I
what's your
want to put the Fed out of business. I want to make a global sound of money, and you can try to buy a Bitcoin from me at maybe 10 million or so. But until then, we're just going to hodl.
Right, and just to be clear, I'm a huge fan of Bitcoin and crypto. I want to see it succeed, but my concern is putting all your eggs into one basket. There's a lot of things that Bitcoin, the blockchain, the programming, will simply never be able to do or fulfill. So why, for the life of me, I can't understand why you wouldn't want to foster a whole crypto ecosystem and converge that to a degree.
Sure. So,
right?
Yeah.
I mean, because there's just simple aspects where if you ever want to get away from a fiat currency, it has to actually be a currency.
Right.
And as you've said multiple times, Bitcoin it's not that. So you keep calling it a currency, but it's not a currency.
Well, it is a currency. Money, we could argue about if it's a money because it's not necessarily the most liquid good. It's not. Yeah, so as far as eggs in one basket, there's a couple things. One, first of all, I will admit the dollar is such a shitcoin that Dogecoin is less of a shitcoin than the dollar. So it makes sense why someone would want to, for instance, invest in Dogecoin rather than the dollar, because I would expect Dogecoin to appreciate much more likely than the dollar. However, the problem is that when you look at the crypto market, I'm not a trader. I try to, as hard as I can to not look at charts. But when you look at the crypto market, these are not goods that are uncorrelated. That is, that it's not like Ethereum goes up separately from everything else, or Ripple or Tron or any of these things. So the problem is when you could so-called diversify, but when you diversify away from Bitcoin into other cryptos, you're not really diversifying, because actually now they're decoupling, but against those, in the sense that Bitcoin is going up and a lot of them have been going down. So I just, because none of them offer anything superior to Bitcoin, and they're not...
From a functional standpoint,
Move on to other questions too.
Yeah.
You guys can talk later.
Well, if the only value of Bitcoin is its value to the fiat currency, what's the point? If you want to do away with the fiat currency, you can actually use. You see what I mean?
I don't totally see what you mean, but let's see if anyone else has any questions.
What if the power grid goes down?
What if the power grid goes down? That's a great question. There's always the person worried about that. Yeah. So.
I'm not worried about it.
Oh no, I'm not saying you. Anyway. So yes, like what if the power grid goes down? That's a concern. However, my thing with that is that if the power grid goes down, money is the last thing that I'm kind of worried about. So it is, if you want to diversify, get your guns, get your ammo, get ready, get your bunker. That's a good way to diversify in face of threats like that. Gold and other precious metals perhaps might be also useful, but like I said, like a lot of this predicates that the global economy is going on, and if there's an apocalyptic situation, we have a lot of other things to worry about, and so money's going to be a problem no matter what people choose to use, even if cigarettes or whatever. Money is going to be a problem then.
What do you think on privacy? Because obviously, you have pseudonyms, and there's certain software companies like Chain Analysis that can track your Bitcoin.
Yeah.
So how is Bitcoin addressing that?
So Bitcoin has a lot of things that people are working on, whether it's things like Schnorr signatures, which makes it has ring signatures like Monero does, so that people can have a multi-sig, but you don't know. You know that there's a collection of signatures, but from the outside, you don't know which one is actually the one spending it. There's stuff built on that makes individual transactions less apparent to others. So, like if you have like a very complex kind of smart contract programmed transaction that uses a lot of script, that's going to be very obvious, but they're working on things like MAST, which is Merkle abstract syntax tree. So it's a data structure for the script that makes them sort of less obvious compared to one another. So there's things like that. Then there's additional coin join technologies, which makes individual transactions, it's harder to track between who owns what, because it's like everyone throwing a dollar bill into a big box and then pulling one out. You don't know whose was whose. So people are working on various implementations of that are very interesting. And I think that'll be very good. Like fungibility goes hand in hand with privacy, and fungibility is a very necessary thing. Something I will point out is a lot of people like to think in terms of sort of perfect systems. Like unless you have the perfect zero knowledge system, then all of it's for nothing. But with Bitcoin, I will say there is a lot of room for good enough privacy and a lot of plausible deniability that I think can get people a long way. And so I don't think it's necessarily as bad as people think it is. It certainly can be very difficult to be private, but I'm optimistic about what we can do in the future. The coins that are simply competing on that, like Monero and Zcash. Monero is more inflationary. It's also less decentralized. Zcash, there's all kinds of weird stuff around the original ceremony, and the monetary policy is very hard to verify that it's actually following the monetary policy. So a lot of the competitors don't really compete on the store of value front, which sort of drives the value of everything. So overall, I think Bitcoin is better because it has that store of value while also offering some very, very interesting avenues to creating more privacy. And I look forward to seeing what people come up with. Does anyone else have any questions?
About 10 minutes.
10 minutes.
I'd love to know about what got you into meat maximalism.
What was that? Oh, the meat maximalism. So, yes, so the question on my Twitter bio is that I'm a Bitcoin and meat maximalist. The meat maximalism comes from the fact that I eat only meat, and I've been doing that for over 2.5 years. And I recommend everyone look into it. Justmeat.co is my website on that. Basically, plants are poison, don't touch them. They're good for decoration and medicine, but not food.
Do you drink beer?
No, I don't drink.
Okay, fair.
Do you supplement with micronutrient supplements or something then?
I supplement with steak. I also do like I do like eating liver as well, and liver is highly nutritious all across the board. So
we do augur or how fat one will die. Or something.
It's catching on. The Bitcoin carnivores are taking over. You will all submit.
Against the Bitcoin vegans.
And there actually are a surprising number of, so the question was about Bitcoin vegans, there are actually a surprising number of those as well. I think that UASF and the block size debate, No2X, all of these were just precursors for the ultimate Bitcoin civil war, which is the Bitcoin carnivores versus the Bitcoin vegans. That being said, guys out there like Matt Corallo, Elizabeth Stark, you're wonderful, love you, love the work you do. One day you'll eat properly.
Is it a little bit egotistical to say Bitcoin is going to be forever the way? I mean, in history, you get GM, you get BlackBerry, you get all these things that have been overtaken in history. Innovation will continue to happen, and one day there might be a better Bitcoin.
Yeah, so the question is whether or not you can, it's sort of, he said it's egotistical, but it's really like the hubris of saying Bitcoin will be the way. Friends of mine like Pierre Rochard, he thinks of Bitcoin as a 100% possibility. I'm more moderate. I believe it to be a 99.9% possibility. I do recognize that, like, I do not know the future. That being said, from what I can tell, the reason Bitcoin is the juggernaut that it is has to do with that monetary policy that we were talking about in this prospect of becoming sound money, and you have to innovate on that. So there's going to be people who come up with, like, you know, ZK snark stuff, like in Zcash, like some interesting thing you could do. Grin is going to be an interesting one with Mimblewimble. You know, very, very interesting prospects for the privacy and stuff like that. But how do they compete on the monetary policy in terms of creating this global economic juggernaut? How do they compete on that? And Bitcoin, as far as I can tell, already has the perfect monetary policy, so I don't even know what you can innovate on. And every day that Bitcoin was around, there's a thing called the Lindy effect that I picked up from Nassim Taleb and Anti-Fragile. The Lindy effect is about ideas, and the longer an idea has existed, the longer you can expect it to exist. So for instance, if I asked you, you know, what was on the New York Times bestseller list 2 years ago? I don't know. I don't know. And yet, you know, I can ask, like, you know, name 10 Shakespeare plays. And you can probably name more than 10 of them. So it's existed longer. I expect Shakespeare to last even longer into the future. We still read things that were from thousands of years ago, at least the ones that we could, you know, still physically, you know, dig up and actually read. Likewise, the longer the idea of a money exists, this is part of why gold has sustained itself even after a century of kind of being demonetized. It's been a part of history since antiquity, so we sort of expect it to continue. Of course, it's being overtaken by something that's better, and you think that perhaps there might be something that beats Bitcoin. The point is, though, because Bitcoin has been kicking ass so much for 10 years, I expect it to be way longer. And the things that people would have to compete on are just so insurmountable to me that it's unlikely to the point of I just don't worry about it.
Well, not in your lifetime, maybe, but
maybe. Yeah. So and the other thing too is that Bitcoin is software. So if someone came up with something that was truly better in terms of monetary policy, that would be in the interest of the investors to want to include in their own currency. And so if someone presented a hard fork, or if they figured out how to do with a soft fork, how to do that in Bitcoin, Bitcoin itself can just do that. You can't upgrade the chemistry of gold. But because Bitcoin is a social consensus, it's not a collective fiction, but it is a social consensus, because you can do that, it can adopt new ideas if better ideas come out. So if it happens to, I think that the best competitor to Bitcoin will always just be Bitcoin itself, if that makes sense. Does anyone have any more questions? I think we have probably like 2 minutes. One more question?
When's the next episode of Noted coming out?
Soon.
Okay.
Yeah, so the question was, when does the next episode of Noted come out? We're actually doing an interview tomorrow with some people, so that'll be out soon. I do recommend checking out my podcast, and I don't feel too egotistical saying that, because the point of the podcast, we like to let other people speak, so it's not me sharing my opinions the whole time. It's you get to hear from all of the best kind of Bitcoin developers and thinkers that Pierre and I know. We give them the platform to just talk about the cool things they're working on. So whether you like Lightning Network, you can go listen to Alex Bosworth and Jack Mallers. If you like some of the weird language stuff, we had a great episode with David Harding. There's great episodes on a whole plethora of technical and economic topics. So I do highly recommend that. Saifedean Ammous had an episode on it that's very good if you want more on the specific topic of this talk itself. So, anyway, I guess that was the last question. I thank you again for all coming, and thanks again to Unchained.